Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'll take you through the Forex market wrap, go through the news that happened this week and some of the key charts that we were looking at. So let's start off with the news this week. All kicked off really with the RBA cash rate statement. So basically we saw the RBA jump forecasts and go straight to 0.85%. So we actually saw a 50 basis point jump here by the RBA, and in their statement it is likely to see that we're going to see more hikes from the RBA in the near term, basically trying to front run these. I think now, as we obviously it's not a definite, but potentially heading towards recession globally by the looks of things. So we're starting to see a lot of central banks hike quite aggressively. The reason why they're doing that is because that when we do start to see a potential recession form, they can start lowering those interest rates again. The cycle kind of repeats itself. The ECB as well left rates unchanged. They did talk about a 25 basis points hike in July, so next month we should see the 25 basis points hike and then more hikes to come thereafter. So ECB now starting to jump on hiking rates as well to try and fight inflation. We then had some employment data out of Canada as well as the CPI data out of the US. Now, I think this was the important data of the week, this CPI data out of the US. Investors were looking to see if the Federal Reserve's hike cycle had started to have an effect on inflation, and that didn't happen. We saw inflation rise yet again. It was forecasted to rise, but it rose substantially to 1%. Now that would have a significant effect on the markets. We talked about in the week ahead analysis video how an increase in inflation will likely see the stock markets fall, the dollar gain strength, risk currencies lose strength, and that's pretty much what we've seen this week. If we go take a quick look at the Aussie US dollar price, we can see that this week we've been pushing to the downside. Now, we did have an early bounce earlier in the week. You can see this kind of large candlestick through here. That was from the RBA meeting when they hiked interest rates, and we did get a bounce. And one of the levels we did talk about this week that was crucial to the market was this point of control. This weekly point of control at 71.84.9 was the area that we said if price started to trade below this level, I think that we're going to see some further downside in the market, and that's what we had in the end. Price broke through this structure level, broke through last week's low and just continued to press to the downside. We had a small bounce at an untested point of control on the weekly at 70.84, but price pretty much shrugged that off and has continued to push to the downside. And with this rise in inflation rate in the US, it's going to put a further pressure on the Federal Reserve to hike rates even more aggressively. So what if a 50 basis points hike is off the table now and a 75 basis points hike is being priced in? That could be a reason why we're seeing the aggressiveness of this US dollar bullishness at the moment. That followed through on pound as well. We looked at the potential for the pound to find a little bit of trouble at this point of control. Through here, it was like 2 weeks worth of a point of control, so a very strong area on the pound. If price remained below this value area low as well, we talked about further downside to the pound. Pound did extend lower. We had an initial bounce from this low volume pocket from a previous weekly profile. Price then quickly has sunk through that as well. So it looks like we're going to see some further downside to the pound US dollar price. Moving on to Kiwi then. So we talked about this in a video earlier this week. We talked about further downside coming from this area in here. We were approaching a key level of support, which was this low volume area. But as soon as price broke through that, we were looking for the potential for this to continue lower towards this 63.55. We did get a retest of this low volume pocket and did get a rejection there. So if you did manage to look at Kiwi dollar, that was the sort of level 64.24 that we were looking at for a breakdown. Again, just kind of highlighting the profiles, we can see that price broke below the value area low and really continued to push to the downside there. Finally, then the S&P. The S&P was a market that we liked the look of because of mainly this sort of distribution here, this evenly distributed profile. We actually spoke about that if the inflation rate rises, we see a break to the downside. If it falls, we could see a break to the upside. The price actually broke a day earlier, so we actually saw price breaking through this yesterday as the New York came to a close, and that really kind of set the tone for the rest of the week, and especially today with that inflationary data. And it looks like if the inflation rate is going to continue to rise, it will have a negative effect on the stock market. We are having a bit of a reaction at this point of control here, but I don't see that lasting too long. I think we'll probably see a continuation back down for the stock markets now. So I hope you enjoyed the content this week. I hope it was informative. I hope you learned a lot. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll catch you in the next video.